Back with the market, flat for the index, no complaints because we are clinging on to 11,700 in the Nifty futures at least as of now, and the day really belongs to steel. Tata Steel after its numbers, Jindal Steel, JSW Steel, these are all stocks which are flying high. Mrugank Paranjape, the MD and CEO at MCX, joins in to chat about their numbers. Mrugank, tell us how the sequential volumes panned out for you and what exactly was the traction across key segments, particularly crude oil and gold besides industrial metals?
So I think the Q4 performance is in many ways a culmination of what we have been doing over the years. In terms of how we look at the various segments of MCX. So this quarter, as you rightly pointed out, both crude and gold have done very well. But with the rich sort of diverse portfolio that we have, it's not something where we are dependent on just one commodity for a quarter because these are cyclical. So beginning of this year, as you might have recollect, metals was doing very well in terms of the volatility, but that waned off, but that's been replaced by these products. So I think the good diversity that we have in our product portfolio helps us a lot. The second thing which has helped MCX is the fact that the retail growth is coming back into this market. Our unique client codes that trade on the exchange on a daily basis crossed 3 lakh. Our total client base that's registered with us crossed 30 lakhs. So I think it's a very, very good sustained growth that we are seeing in terms of the retail segment. Obviously this is because of the immense support we have received from our members of the exchange. A lot of them have combined their memberships under the unification that SEBI has allowed, and that is helping a lot of them as well to grow their volume. So I think multiple factors, retail growing, good volatility and a very diverse portfolio is helping the revenues in terms of its growth that we are seeing on a quarter-on-quarter basis.
Okay, so what's been the realization trend that you've seen sequentially and trajectory of the transactional revenue along with the ADTV trends?
So I think first I'll talk of the ADTV trend. So it's very positive. The full year number we have grown about 21% over last year. If I take the growth and as you would have seen the last historical years data, typically it is something which grows gradually across the full year. Quarter on quarter you will see some variations, but I think this sort of a growth is a very healthy number. We see similar trends continuing in terms of the growth on the ADTV that we foresee in terms of some of the time to come. So I think to your question on what trends do we see on the turnover, I think we are expecting similar trends to continue for some time in terms of the growth, especially in terms of the volume.
So what is the EBITDA margin range that you're looking to maintain, and what are the levers for improvement as the software charges as well are expected to gradually decrease in FY20?
So I think if you sort of track our numbers and what we've been consistently informing all our investors as well, that from an exchange perspective, the top line will grow consistent to our ADTV growth. When it comes to our costs, there is about 1/4 of our cost base which is completely linked to our top line. It is a percentage of our top line, and therefore that grows at the same rate as the top line. But it is the balance costs which we have contained very well and which we believe we can contain at the rate at which we have been doing, which is not more than a sort of year-on-year growth of maybe 1 or 2%, and it is really that differential which will add to the EBITDA margin going forward, because for every 100 rupees of revenue, I think 80 rupees sort of goes straight into the bottom line after the fixed costs are now taken care of.
Okay, and how is the liquidity in the options and the level of pickup seen in institutional participation?
So I think if we talk about options, very nice trend in the last quarter. In terms of the retail client base, we probably grew, our daily number of clients has now crossed 1,000 clients on an average for the last quarter, which is at least about 20% up to the previous quarter. On the institutional side, of course, we are still awaiting some parts of the regulatory framework to be in place. So while the SEBI board has already allowed mutual funds and PMS, we still don't have the final guidelines. They are expected any time now. We also expect trading in indices to be approved. So I think once a couple of these things happen, we will see the institutional participation really come through in commodity exchanges.
Okay, how's your market share fared since NSE and BSE have been taking steps for, more amount of traction in commodities? How's the strategy there, going forward in order to really counter that?
In terms of the reflection, the last 2 quarters market share reflects the fact that our market share in terms of the overall commodity markets is at an all-time high of 91.6%. What it is also showing is that our belief that as long as your products are consistent and in line with what the market expects, as long as your technology is performing in line with again market expectation and delivering what the market wants, and finally your people who need to have that connectivity with your members so that the members believe that what MCX offers is really a good product and feel the comfort of trading here. I think we are very confident that we are unlikely to lose market share in terms of existing products. Obviously, if there is some new innovative product which comes about in another exchange, definitely people will go and trade on that, but that's not really losing market in our view. We have always said that new exchanges coming in, the more established or larger exchanges coming in is only going to expand the pie, and I think therefore MCX does not have much to worry about.
Fair enough. Thanks very much for joining in. 4% high on the MCX stock post the kind of earnings. Well, let's move away from that, and there's news in the financial / NB